Thanks, Becky, and welcome everyone. Thank you for giving up a sunny evening to sit in and learn a bit more about wealth management. So it's a very dynamic session. If you want to ask any questions, please pop it on the chat. You can direct it either to the person specifically if you want to say that, or if not, we'll just fly it out to the rest of the group. So I'll just start by introducing myself. So I'm Rosanna Ivory. I work at Aberdeen Asset Management. So I am an investment manager there. So Aberdeen is an asset manager. We'll come on to that a bit later. And we manage about £500 million pounds of assets under management. So that's across equities, fixed income, private equity, and real estate. Personally, I read history at university and then wished that I'd had something like GAIN to help steer me. Would have wasted a few years of failed internships at different places trying to work out what I wanted to do, but I ended up doing an internship at Aberdeen, then I joined the grad scheme, and I'm now on our European equities team. So that's just a little intro to me. Maybe we'll move over and start with Dasha, who could introduce herself, and we'll go from there.
Great, thanks. So I'm Dasha. I work at Killick & Co, which is a very traditional wealth management firm, and I'm an investment manager there. I suppose in a nutshell, my main responsibility is help clients with their investments. So the client to me is the end investor. So that could be your neighbor, your doctor, even your teacher, just somebody who's got some money that they would like to invest.
Great, that's very helpful, Dasha. Thank you. Maybe we'll move on to Rebecca.
Yep. My name is Rebecca Davidson. I work at Evelyn Partners, and I'm a partner in our investment management division. Like Dasha, my day-to-day job is really looking after private client portfolios, but this can vary from families, charities, endowment funds to trusts. I have quite a range of clients. Half of them are UK and half of them are internationally based. I joined the industry 10 years ago and I started at a little boutique firm, but over the years, through acquisitions, I now work for a very large wealth management firm. And at university, I studied politics and economics.
Great, thank you, Rebecca. I think, Carly, if you're happy to go next, please.
Yeah, hi, I'm Carly Morehouse. I'm a fund research analyst at Quilter Cheviot, focusing specifically on Asian and emerging market equity funds. Quilter Cheviot is one of the largest discretionary investment management firms across the UK, Ireland, and Channel Islands. And we manage bespoke, so tailor-made, if you will, investment portfolios for individuals and families. And we manage about £23 billion.
That's great, thank you. And Lydia, why don't you introduce yourself?
Great, thank you. Hi there, my name is Lydia Garrett. I'm an investment manager at Evelyn Partners, along with Rebecca. So much similar. I also work with private clients, charities, and endowments. My team is primarily charities, so about 80% of our assets under management are from charities, which is quite an interesting nuance, I think, within the business. I joined the company 4 years ago now. So originally was Smith & Williamson, and as of last week, we became Evelyn Partners, which is very exciting. And I sit on a team with 4 other investment managers, and we run our money on a very kind of collegiate and bespoke way. My team really has a big focus on ethical investing because of our charity clients. And so that's something that I really take a personal interest in. At university, I studied politics. I was at Durham University, and I took a bit of time to get into the industry. I worked in advertising for a bit, at a startup, selling driving lessons for a while, and then eventually settled on asset management. So yeah, a bit of a convoluted way in, but I really enjoy it.
That's great. Thank you very much, Lydia. Maybe just to give a little bit of colour. So I said £500 million, I meant £500 billion. What's a few zeros between friends in terms of the amount of money that Aberdeen runs. So we are, unlike some of the others on this call, we run institutional clients only, so no private individuals, which basically means that we do, for example, council pension funds, or we might run money for big insurance clients, or we might run pension fund money for large corporates. So I suppose the difference there is that we don't deal with personal people, so no people on the street particularly. So the clients that I speak to are very professionalized, and they might be sort of fund managers that you might give your money to, and then they might invest in our funds. So it's a little bit more removed. So that's just to give a little bit of context there. Maybe it might be interesting to ask some of you about what first attracted you to the industry, and maybe why you want to work more with private clients, just to give a sense of maybe how that might be different to what I do with institutional clients. So maybe we'll start with Rebecca.
I will give you the really honest answer. I started with areas that I knew I did not want to work in, to sort of slim down the process. I was very interested in investments, but I didn't want to work in the sell side in investment banks. I didn't think that culturally it was where I wanted to be placed. And I took a real interest in individuals and families, and I wanted to be on the relationship side. So I sort of lined out all of the areas I did not want to work in. I was left very much with fund management, with private client wealth management. And I reached out to a lot of friends who had older siblings in the area. I reached out directly to companies and read a lot of research on what they offered. And that's how I ended up in a very small boutique looking after personal individuals. I think also the other thing I would flag as something to do is take an interest in actual investment myself, opened up my first ISA portfolio, made a lot of personal mistakes, but learned a lot about involving myself in the investment process before trying to get a job in the industry myself.
That's great. Thanks, Rebecca. Maybe, Lydia, you could say how you made the leap from selling driving lessons to
of course.
where you are today.
So as I said, I did politics at uni, had always done kind of a few work experiences in advertising, thought I loved that, and then started working at this startup doing sales basically for them. And it sounds a bit convoluted, but I actually think the skills I learned there helped me so much in my day-to-day job now as well. But it kind of all pivoted when I got an email from a family friend of mine who was a partner at a small boutique investment firm. And she asked me if I had any friends who'd be interested in coming to a talk about why fund management is a great career for women. And I just got a bit competitive and thought, well, why can't I go to the talk as well? So went and just found it so interesting. And had never really had that much exposure or understanding in any depth of markets. And for me, it was the link to politics and current affairs that I particularly enjoyed, and how that really impacts markets and everything that goes on around us, really. And so from then, I, similar to Rebecca, started reaching out to companies, doing research, talking to friends who I knew kind of were involved in the industry. And then the sweet spot of wealth management for me was having investment exposure, getting to do research, but also being client facing and having that sales role, which I did enjoy from my driving lessons days. So for me, it was really kind of that blend where a slightly strange path actually, I think, gave me some very useful skills to go into it.
Yeah, no, that sounds very sensible. And Dasha, maybe be interesting to just hear, you were drawing out that piece around working with private clients and why you enjoy that. Maybe you could explain a little bit more about that.
Yeah, so I studied economics at London School of Economics, and a bit like Lydia, took my time to actually get into finance. I was at university studying economics just after the great financial crisis, so the reputational damage to the sector for anybody who doesn't remember that time was just so huge. So investment banking also didn't appeal to me. I think it took me a long time to research and really understand all the different segments within the financial world, because it is so broad. I think when you are dealing with the end client, the private client, you have such an element of accountability, and I really like that. So you really see the impact of your decisions. You go on that emotional roller coaster with them, and if they're investing to buy a property in a few years' time, if you give them good advice, you see them buying that property. If you don't, they don't, and you definitely hear about it. So I liked that element. I suppose I should say I joined Killick in 2016, and I used to actually work on the research team. So I was on the funds research team and helped them manage discretionary portfolios for clients. And for our listeners, discretionary means where a client gives you the right to invest on their behalf. So I was managing discretionary funds portfolios and then moved on to UK smaller companies. And then about 2 or 3 years ago, I decided to make that leap to be client facing, just to be closer to that end investor. So yeah.
That's really interesting. Thank you, Dasha. And maybe Carly, it'd be interesting to hear a little bit about your journey, and maybe just to speak a little bit more about what bespoke solutions means within the industry and how you go around building those and thinking about that.
Sure. So I'm not actually client facing. So I am in the fund research team. So similar to, well, exactly the same to what Dasha was saying she used to do. And so I guess my clients are the investment managers at Coach. So, investment managers like Rebecca, Lydia and Dasha are now. Maybe I should just say a bit about my background. So I went to University of Warwick. I didn't do anything finance related. I actually, my undergraduate was in sociology. And then I stayed on at Warwick Business School and did a master's in business, but again, nothing finance related. It was actually with a specialism in marketing. So to be honest, I had no idea what I wanted to do. And I decided while I was doing my master's that I wanted to go into consulting because, one of the main things I was really looking for is, well, it was a job where I wasn't doing the same thing every single day. I wanted my days to be extremely varied. And I thought, with the project work of consulting, that would be perfect for me. So I joined a company doing, audit, accounting, tax, but also has a consulting division. And so I work primarily with banks, actually, but it was much more on the compliance and regulation side. Within my first year, because someone else in the team had started to do the CFA, so which for people who don't know is a finance qualification. It stands for Chartered Financial Analyst. You do exams and have a certain amount of hours, and then you become a charter holder. So I started to do that because I was just looking for ways that I could improve my CV and that sort of thing. So I quite blindly went into doing the CFA. And it was while I was revising for these exams that I just realized, this is what I want to do. Investments was just so interesting. And as much as, or as difficult as those exams are, it was the content that really, encouraged me and really motivated me to keep going with it. And very luckily, actually, my company, has a lot of other areas, and I found out that they actually had a wealth management team within the company in their financial planning division. So I moved across to the wealth management team and became a fund research analyst through that avenue. So very much fell into it.
That's really helpful. Yeah, I think it's quite hard to know what you want to do in this industry until you give a few goes a try, given that you can't really do a degree in it and you can't really have a go until you have a go. And I think I would just say that when you join a company, it's quite easy often, I think, to move around within that and move into adjacencies and adjacent teams. So you don't necessarily from the beginning need to pick something highly specific. Like I work in Europe, for example, but I didn't know that I wanted to work in Europe, and I don't think you have to be too specific from the beginning. I think I'm not sure where the noise is coming from. That actually me, so I apologize. But Rebecca, there's actually a question for you here from one of the ladies attending, which is why did you decide not to go into the sell side? What do you think are the benefits of starting a career in the buy side versus the sell side? And maybe just you could provide a little bit of detail about actually what the buy side and the sell side are as context for that.
Yeah, absolutely. Sorry, there's a bit of jargon there. At the most simplistic front, the sell side is of investment institutions that are typically selling product, and the buy side, we are buying it. And when we are buying it, as Dasha focused on, the end product is your client, the individual, the family, the trust, the charity that you represent. And the reason why I like being on the buy side is that my incentives are aligned with the client. I represent the client, and ultimately the decisions I make, if I do well, my client does well. If I do poorly, the client does poorly. And so the outcomes that I generate are very much aligned with that end investor. And I think that the word accountability has been raised here, and I think that that's something that we probably feel every day. You are very accountable and responsible for the outcomes for your clients. And I think that's a really motivating factor of why we get up every single day. Relative to on the sell side, you are providing data, you're providing recommendations, advice, but ultimately you're not in front of the end user or responsible for that outcome.
That's clear. And maybe just to say, the sell side generally means working for an investment bank. So that basically means you do research, but you sit within an investment bank, whereas the buy side is basically anything that's not an investment bank. Just to be clear on that. Maybe we could go on and move to Dasha. Maybe you could talk a little bit about your daily routine, or maybe what the course of a week might look like for you.
Sure.
Maybe how frequently you meet clients, that sort of thing.
Yeah, I mean, every day is quite client-led, and I actually did try and sit down today and write down the things that I definitely do every single day, because every day is different. I suppose every morning you do get up and you check your inbox for any emails that have come through from clients, any queries that they might have. Then I check the news and the markets. I'm not one for reading a lot of newspapers. I think you can go down various rabbit holes there. So I just use, we use FactSet, which is a tool that provides lots of data and news for financial professionals. So I get all of my updates on the market from there. And then after that, the day is quite free to start dealing with your private clients. So that is reviewing their portfolios, calling and meeting them. Yeah, that kind of thing. I suppose in terms of calling a meeting, I suppose these are actually two things that we get measured on within the company at Killick, amongst other things, but they're quite important metrics. I probably spend a third of my time on the phone. I would probably try and meet a client every other day to run through the portfolio, answer any questions about the market. So it is very interactive with the client, and that's what you want as well. You want somebody who's engaged. I suppose it might be worth highlighting that when you are dealing with private clients, there's so much regulation around the advice. You really have to make sure that it's suitable. So I spend a lot of my time trying to understand not only what does the client want to achieve with their investments, but also looking at the bigger picture of their financial situation. And that can include looking at their income, expenditure, assets outside of Killick, like their house or any other investment accounts, just to make sure that they're not taking any excessive risk, and anything that I recommend is appropriate for them.
Great, that's really interesting, Dasha. And maybe Carly, you could talk a little bit about the research side of things, because you do something that's slightly different, and maybe even just talking through the maybe the kind of hours that you work in a week, whether you have to work the weekend, some of that detail as well.
Sure. So yeah, I wouldn't say there is a typical day in my job. Obviously, it varies on a day-to-day basis, which, as I said before, I really love. But there are obviously certain things that happen every day. So, for example, we have a firm-wide meeting in the morning every day, which includes the research team and all of our investment managers across the firm, and that's to go through the markets, what's happened overnight, any stock or fund updates. Within the funds team, we also do a meeting every day, which started in the pandemic actually, and we've just continued that because we all really enjoy the interaction that we have now that remote working is much more of a thing. Every morning I go through my own reports, which are generated for me overnight with regards to the performance of my own funds and specific markets, so that I'm aware of anything in case I have any queries from investment managers and that sort of thing. But other than that, really, those are my key things that I do in a day, and otherwise it's quite fluid, and it really just depends on what projects I'm working on, whether that's a change in recommendation of a fund or a search for a new fund, whether I'm doing desk-based research using data from, equally I also use FactSet, things like Morningstar, where there's a lot of data for individual funds, or whether I'm a bit more out and about meeting fund managers, that sort of thing. And then with regards to the second part of your question, as I said, we have this morning meeting which takes place at 8:30 every day. So my day starts at about roughly an hour before that, about 7:30, so I can just run through all those things I said before. And generally I finish work about, I'd say, about 6:30. And yes, I don't work on weekends. So I feel like I still manage to have a pretty good work-life balance, actually.
Yes, I think it's one of the great misconceptions about the industry is that it's like investment banking, that the hours, well, I personally find the hours are manageable, and I rarely have to work at the weekend because markets are closed, which is a delight. And yes, I guess in terms of my everyday, and part of the reasons why I really enjoy working in the industry is that so news comes through first thing in the morning, and you never have any idea what that news is. It's like waking up every day is different. Someone's had a profit warning, something's different, and your day is quite dependent on the news that comes through. So I work mainly just with the company, so I cover consumer as well as being an investment manager. And maybe, Carly, it might be interesting, you talked a bit about research. Is it more based on funds, or is it more based on companies?
Yeah, so I sit within the fund research team. Looking specifically at funds, as you said, but we do have at Shibia an equity team we work very closely with, and obviously they're looking at individual companies. But within the fund team, I think there's 9 of us altogether, and we're split across asset classes and regions. So I focus on Asian emerging markets, long only equity funds. We've got someone who focuses specifically on fixed income, somebody who covers US equity funds. So it's very much split across those different asset classes and regions.
That's great. We've had a few more questions in. So Lydia, I'm going to fire a couple at you. So during client meetings, how much of the work entails educating the client about new trends? And separately, is travel a large part of your role, or is it mostly in the office every day? Are you able to travel more in certain roles than others?
Yeah, of course, very happy to answer them. So it's quite interesting actually. So because some of my clients, we have charities and then we also have private individuals. And so you really need to pitch the meetings you have depending on how professional they are, their level of investment understanding. So we have kind of some trustees I'll have who have worked in the investment industry themselves for years. They might have been investment managers themselves as well. That's why they're on the kind of finance committee of that charity. So in that case, we might spend 45 minutes talking about markets and the different trends that are impacting the portfolios, particularly at the moment, of course, with all the moving parts that we're seeing. They really want to kind of get into the nitty-gritties. We might also have a certain charity where the trustees are, for instance, we have quite a lot of religious charities and the trustees will all be nuns. And they've never had any market experience, and the only kind of investment experience they have is through talking to us. So in that case, we might just talk about what's going on in the trends for about 20 minutes. And then it might even be a kind of a private client who the only time they think about investments is when we do meet. And in which case we'll really go through the high level, what has actually impacted their portfolio, what's driven it, but we won't go into the intricacies of why interest rates are changing and how that will affect company valuations, for instance, because there's just no point. So part of that is really kind of understanding who you're talking to and what's going to help them understand their money and the risks that they're taking. And that's kind of the key part, I think, any of our roles. Like everyone has said, it's really kind of understanding who is sat in front of you and so how you are communicating to them. And then on that kind of, so the structure of our client meetings, what we normally do is run them through the risks, the risk objectives that the portfolio has. So typically with a client, you'll get to know them, you'll have initial meetings, you'll work out what their other lifestyles are, what their other assets are, what their kind of ability to take risk is, but also what their desire to take risk is. And so often those two things do not align. Someone could have all the money in the world, but feel terrified of markets. And so you put them on a lower risk profile, for instance. But so at the beginning of our meetings, we really have to make sure that they feel comfortable with the risk they're taking in their portfolios. We'll then take them through the market trends, and then we'll talk through their performance of their portfolios and actually what we're holding. So each of those parts, as I said, really can change depending on who we're talking to. And that's one of the key things of our role, really, just understanding who they are. On that, so travel, it really depends. Yesterday, I had the joy of going to Woking for a pitch, which was quite glamorous. I've been to Glasgow with work. We've had some other pitches. I've got some a Catholic charity that I manage as well, based in Harrow, I go to sometimes. But equally often clients come to us for meetings. They like coming into the office. We've just moved, Rebecca and I, to new offices as well, which are slightly more fancy than before. So I think people come in a bit more.
I might add on Lydia's point, I have a lot of clients abroad as well. But I actually think one of the best developments in our industry is the technology. To put it into perspective, in 2019, I took 40 flights, and some were to less glamorous destinations. There were some nice ones, the Caribbean, New York, Lisbon. But the reality is that I think video conferencing, as well as having clients come into you, has actually really improved our capacity. So we still have really meaningful meetings on an annual basis with clients in very exotic destinations, but then it just allows us also to update our clients on a more regular basis over the phone, over video calls, which I also think has just strengthened the relationship, but also is a better use of our time, which ultimately hopefully translates to better outcomes for them. So yes, definitely the opportunity for travel in many different forms, whether it's Bournemouth to Bermuda.
I love the Bournemouth to Bermuda idea. Hopefully there are lots of direct flights. So for me personally, I spend more time looking at companies than I do really meeting clients, just fewer number and they're larger. So for me, for example, I was in Paris for a conference all of last week. That was pretty fun, just as a way of seeing a lot of European CEOs. There were a lot of them attending, and I was meeting sort of 9 CEOs a day back to back, which was quite intense. And Paris was also exceptionally hot. But you know, that for me is really important. So too is going and doing site visits as well, as a way of helping my understanding of companies. So that's also pretty cool. Like, you know, you can go to all kinds of places like the Ryanair headquarters. I've seen a lot of very unsexy manufacturing plants and things in my time, but it's super interesting, and you end up in really crazy places, and that's another part of things that I really enjoy. So my travel is hardly ever client focused. Similarly, I spend a lot of time sort of the Midlands or Bristol talking to clients. My meet is generally, you know, going to Stockholm or somewhere quite like that, which is a part of the job that I also enjoy. Dasha, there's a question for you here. So you mentioned that you spend a lot of time on the phone, and just interested why. I would have thought that you'd be spending less time on the phone in today's world.
Okay, so I suppose, I mean, one of the key parts of my role is to build client relationships. And I think speaking to clients is the best way to build that relationship. You can send endless emails to people, but at the end of the day, will they trust you? That's the key question. I often compare, seeing your financial advisor, investment manager, whatever the job title is, similar to going to seeing a doctor. If a doctor emailed you and said, well, I think you have flu, and you think, no, actually, I think I've got COVID, are you going to trust them just because they sent you an email? Would you not rather meet them in person or speak through your symptoms on the phone? And that's why I do end up on the phone for such a large amount of time. And I do find when I started my role, on my client-facing role, I had that temptation to hide behind emails, just send it out nice and quick. You can send it to 100 people straight away. But what I find is that you just don't get the same engagement. Speaking to somebody for half an hour or going to visit them even in their home just really starts building that long-lasting relationship. And in the private client industry, relationships are very long. When clients are shopping around for their financial advisor, it's a relationship that can last 10, 20 years, sometimes longer than a lot of marriages. So, you're really committed to someone. And, how can you commit to someone without meeting or speaking to them? So it's quite important. But I would add to Rebecca's point that, the Zooms, the online webinars and meetings that we can have with clients really does free up that capacity to meet clients in a different way. And I think that is also really really important, and also it just increases your productivity so much.
Yes, I would really agree with that point. I think also hybrid working is really important for parents, and the ability for both women and men to stay within the industry. So I think we've taken huge strides forward, both in terms of the technical ability, and probably our boss's view of our productivity at home has probably been helped by COVID. Lydia, a question here for you maybe. What are the key differences between serving private individual clients versus institutional clients in terms of risk tolerance, or the importance of integrating ESG, and maybe some other examples?
Yes, so it's an interesting difference because like I said, we have our private clients and we have our charities. The main difference, which I really try to remind, especially when you actually have to remind trustees of it quite a lot, is with private clients, you're aware that it's them individually who are taking the risk. It's about what they hold, their ethics, what they want to impart onto a portfolio. With charities, however, it's not the trustees' decision. So one thing which is quite difficult to get across to trustees is that it's not their risk tolerance, it's not their views on the world, and so their ethics that they want to impart, but it's what the charity is trying to achieve, and that's what needs to shape those two things. So with private clients, it's kind of almost more intimate in getting to know them and getting to know their personalities, and that really will shape their risk and their ethical restraints, whether they want to not invest in any fossil fuels, or they want to have a gender equality tilt on their portfolio. That's completely up to them. So there's a lot of really kind of getting to know them deeply. And then for the charity, it's kind of really working with the trustees to understand what exactly it is the charity is trying to achieve. And the Charity Commission, who kind of set the rules for charities and how they can invest, are really keen to impart that and really make sure that there is that definition. Really interestingly, actually, there's been a recent law passed, which has slightly shifted how trustees can look at their ethics. So it used to be that no ethical constraints could really be put on a charity. And Rebecca, please correct me here if I'm wrong, because you've got more experience than me here in this area as well. But that you couldn't invest in certain ethical ways and constraints if it would impact and kind of diminish the financial returns for a charity. But a recent law has kind of overturned that, and a case that happened in the High Court, and has basically said that a charity is now allowed to have ethical restraints that basically might impact financial returns, because those ethical restraints can be viewed of higher importance. which is a very interesting shift kind of in how charities will start looking at their ethical investments, how they want to kind of look at, all the ESG factors. So ESG is environmental, social, and governance factors that are impacting companies. And so, yeah, recently it's taken a bit of a shift, but yeah, I think the key difference for me is really the kind of view of the individual versus the institution for who is really what they're trying to achieve. Rebecca, I know you've got great experience in this area as well, so I don't know if you would add at all.
No, that's exactly it. There's been a big shift there. I'd also say potentially the time horizons that you're investing in. Clients typically say, look, 3 or 5 years out. And in fact, you can be looking after a client 10 or 15 years down the line. So there's many different stages, but there typically is the restraint. Whereas when you sit down with institutions, again, it's really specific on their objectives. It's going to vary for every institution. But big institutions like pension funds, insurance dedicated funds, charities, endowment funds, typically are investing on 20 to 50-year time horizons. So the sort of risks that you're able to take, your sort of starting point is quite different from an individual whose next inflection point might be 5 or 10 years out.
Thank you. That's really clear. Changing tack, Carly, I might just ask you this. This, apologies, it says anonymous. So I'll say someone is asking, as a first-year student at university, what do you think I should start doing to learn about banking or get experience in the field?
Well, as someone who didn't really start doing that at university, I can't give you loads from my own experience. But to be honest, I do think things like this are incredibly helpful. But also over the last couple of years, I've actually had a lot of people contact me on LinkedIn and just ask me to kind of go through what I do on a day-to-day basis, and give as much insight as I can into other roles within the business. So that they can have insight from somebody who works in the industry, because I think as much as Google is great, there's also so much information out there. It can be a bit overwhelming. So yeah, I think attending things like this where you can ask questions as you are, and yeah, really get insight from people who work in the industry is yeah, incredibly important. So just speaking to as many people as possible really is what I would say.
Just on that, Rosanna, I actually remember getting the best piece of advice for someone when I was at uni that said, think of your kind of the skills that you're developing now as kind of your tool belt that you're making. And as you're going to university and as you're talking to people, like Carly says, and speaking to people, you're kind of adding a different tool to your belt as you go. And they can be tools that's, yeah, talking to someone on LinkedIn, doing a course like this. I know Bloomberg have some great free courses you can do online. I think Reuters do as well. The FT as well have some great kind of small courses you can do over summer. Also the Open University does like free ones. So if you're not studying, say economics or a finance related degree, you can go on there and do like introduction to investment or introduction to finance or introduction to accounting. It doesn't cost anything, but you get a kind of little certificate after and you can just pop that on the bottom of your CV. So kind of things like that to just slightly build your tool belt, I think are quite useful as you're progressing.
I would also add to that actually, that one of the best pieces of advice I got, and not this was after university, but when I was looking for my first job in finance, you should look at starting professional exams, just initial ones. So for example, I did the investment management certificate, but the CISI, which is the Chartered Institute of Securities and Investments, I believe they do equivalent ones that get you started. And I think if you are set on a career in finance, they send quite a strong signal that you are keen, but also you are serious about the industry, because like I found when I left university, I had no idea what I wanted to do. So you end up applying for lots of different industries. So if you've got an exam that's specific to a certain sector, then you're basically saying, I am committed to this industry. And I think it really helped me when I was looking for a job.
I think this is also the point where I say that Gain on its website has some really excellent resources. So I think there's a lot of links to things on that. And I think there are a number of free online courses. You can also sign up for the Gain internship. So at Aberdeen last year, we took on 3 interns and we turned 2 of those into full-time hires. And I know there's a number of other participating firms. I'm not exactly sure, but I'm sure it says on the website when those applications close, etc. So that's another great resource. And I think, so for me personally, I think making sure that you're interested in the career is probably, for myself, more important than starting the exams, because the exams are quite, make sure that you at least do have some interest. The other thing I'd say are podcasts. I think they're excellent. There's lots of those. So there's one like Invest Like the Best or Capital Allocators, and that can also give you like a really broad range of different types of investment professionals, from private equity to like a whole range of different people who invest in different ways across the industry. So I would go to the Gain resource website, and as well as all these excellent places that Lydia was suggesting. Rebecca, tied to this, we've had a question. How would you advise someone who wants to gain internship experience in asset or wealth management, given that many firms don't have established schemes in place?
It's a very good question. The first thing I'd say is make a list of firms that do. Evelyn Partners is definitely one of them. That's my advert for the day. But research those that do have schemes and go ahead and apply them all. I would also encourage, reach out. You can cold call people, but if you're going to cold call and apply for some sort of role, make sure what you write is good. Well, I've received, make sure you stand out, make sure that you can really demonstrate an interest in investment, and why, if you're going to be working with them for a short period of time, you think that you can add value whilst you are there. So it's not just a one-way, you're gaining something, why would I take you on for 3 weeks during the summer? I've seen some brilliant letters come through, and I thought, you know what, we're going to give them a shot, because they convinced me that they're going to add value and I can add value to them, vice versa. So if you are going to go through the cold calling route, make sure that whether it's in your cover letter, that you really portray that you're interested, that you think that you can add value. And there's many ways that you can add value. You're in a demographic that's going to be part of our biggest structural trends. You're tied into all the interests that we know, products and services that we're trying to research at the moment. So really sell yourself. And I think that alongside conventional grad schemes and internships is a starting point. Other than that, also again, resources that look at investment days, short courses. You can meet other networks and other individuals there that can help you get access to being involved within an office environment.
Again, I think Gain has a mentorship program as well, something else that I forgot to flag. And so we've got a question here. I will invite, I don't know who to pick to answer it, because I'm not really sure what the answer is. How can one eventually transfer from computer science or tech background in asset management? I'm going to let someone decide whether they can answer that one, because I'm afraid I don't have a computer science or a tech background.
Can I just stress that you can do you can come from any background and get into investment. We have a range of colleagues who have done undergrads in a range of topics. We've got colleagues who haven't done an undergrad at all. I think the key thing that I want to see when someone sits down opposite a room with me in an interview is that they're genuinely interested in the world around them. They're interested in investment. They're interested in the concept of creating value through capital allocation. And it really doesn't matter what your background is. If you can demonstrate that and read the books around the topic, then you have just as much chance as anyone else who has a finance or economic background.
I'd also add, I mean, I don't have a computer science background, so I do apologize for the person who's asked the question if this is not completely relevant. But there are companies out there that are looking to create rules or almost algorithms for investments. So as an example, even at Killick, we launched an app that has you send the money in essentially, and there's 6 different buckets. Each bucket is a portfolio that you get invested in. And we had an individual in the company that had a more, I suppose, technical computer related background from their university, and they were able to code the rules in such a way that the investment would be automatic. And that is something to consider if you are trying to sell yourself with a computer science background, that you could help on that front to some firms.
Yeah, that's a great piece of advice. Loving all the questions coming in, guys, so thanks so much. Keep those coming. Carly, I'm going to ask you the next one, which is, what do you value most in candidates?
So as in people who are applying for jobs at the firm. So, I mean, it's quite similar to what Rebecca was saying. It's one of those things where, you know, you see a job description and, you know, it's very rare that that a candidate will tick every single box. Because then there's also a lot of, you know, soft skills as well that you're looking for in a candidate. So, you know, do you get along with them as a person? Do you think that they would be a good fit for your team? That sort of thing. So, as you know, we are very team focused, and that's something that we're you know, really looking for, as well as having you know, the right type of experience. It obviously depends on the role that you're going for, but yeah, it's like Rebecca said, it's if it's more of an entry level role, then, you know, it's more you know, an enthusiasm for the industry and very much a willingness to learn, really.
Yes, absolutely. I think a willingness to learn is key. We've got 2 questions here that are basically asking the same thing. So Lydia, I'm going to ask them to you. Could you provide a comparison between working for a large bank versus working for a boutique firm in private wealth management?
Oh, yes, I'll try. So I guess the main difference is, so a large bank versus a boutique firm. Well, you obviously, I think the main difference is kind of I must caveat this by saying I've only ever worked at Smith & Williamson, now Evelyn Partners. But I think the kind of main differences possibly are the different kind of breadth of roles within both. So if you go into a large bank, you're kind of a part of a wider system where there might be so many different departments. You know, if you're working for a Goldman Sachs or a JP Morgan, you're there working in the investment team. There's also a larger investment banking team. They do have wealth management as well within JP Morgan, sorry, which is why I say as if you're working there doing wealth management. They'll also have their risk departments, you know, huge teams throughout them. Whereas if you're in a boutique wealth management firm, you're in a firm that is solely doing that. So it's kind of, you know, the difference between, you hear about the kind of big 4 accounting firms, going to one of them versus a much smaller company. And I guess the kind of main difference is kind of the breadth that those companies offers, where you could move between them, but then also kind of how you're treated as a person, possibly. I know some friends that have gone to really large firms and say they slightly feel like cogs in the machine. Other ones who've gone and loved it because they can move between departments and they get kind of the benefits of what larger firms offers, and the big Christmas parties and the expenses that can be paid. Whereas in a boutique firm, you might not have that because they're trying to, you know, get their margins going much tighter. But you really kind of get known as a person. You might get promoted quicker. Also, I should say, a big difference often between those larger firms and boutiques is that those larger firms might have more structured graduate programs than, say, a smaller boutique firm. Again, the kind of difference between them, I think that when you're on a structured graduate program, it's really brilliant because you'll often get your training. They'll pay for you to do your exams. You'll often come in with a cohort who you might become very close with as you kind of work together. Whereas as you start in boutique, it might be slightly more, pushing to get which qualifications you want. And depending on the firm, they might be very supportive or not. I think generally firms are very supportive of that, but you never know. And so kind of one thing I'd say is that with the boutique firm, it can sometimes feel like you accelerate in your career much quicker. And in the graduate program, in a larger team, it can feel that you take a bit longer, but eventually you kind of will come to the same point. So sorry, I don't know how helpful that is, since I haven't actually been in another firm, but I know kind of from my perspective at Evelyn, being at a kind of medium-sized firm in that sense, you do get the benefits of both the structured grad scheme, but also getting known quite well as a person. So there you go, another kind of sly plug from Evelyn Partners from Rebecca and I.
Sounds like a great place to work. Maybe just on something a bit more topical from sort of an investing point of view, Carly, I'd be interested to hear on how you guys integrate environmental, social, and governance considerations into your everyday.
Yeah, so ESG is something that we have been integrating into our research process for quite a long time, actually. Yeah, it's becoming obviously a huge topic within the industry. And yeah, so as I said, it is something that we've been looking at for a long time. And with regards, I can obviously only speak with regards to the fund research side of things, but we do have a responsible investment team. We also have a fund research analyst, so within my team, who specialise solely on ESG funds, whether that's impact funds or sustainable funds. But with regards to ESG criteria, when we are looking at funds and speaking to portfolio managers and really understanding their philosophy and process, we really are digging into how exactly they are integrating those ESG factors into, whether that's at the, the way they look at their universe of companies, how they whittle that down into their, their stock selection, and then whether that feeds through into portfolio construction. So, perhaps companies with better ESG credentials get larger positions within the portfolio. We also obviously look at how they look at their own funds as a fund house. Are they looking at the fund's overall carbon emissions, that sort of thing. So yeah, it's something that I think is very fluid. I can say that we've had a lot of iterations of how we're judging and analysing the funds, and I think that will continue to be very fluid. But is something that we take incredibly seriously. And, I've myself and a number of other analysts within the team have also done the CFA ESG exam, so that, we feel that our knowledge is also improving at the same time. Yeah, it's a very big part of what we do, really.
That's really helpful. So final two questions. One, firstly, Rebecca, I'm going to ask you the same questions that I just asked Carly, and then just I'm going to give Dasha a heads up. So there's a question here about finances traditionally being a male dominated, with the husband dealing with household finances. Are you seeing more women take control? So if we could just fit in those two final questions before 7 o'clock, they're quite different. So Rebecca, you go first.
Yeah, absolutely. Just on as Carly mentioned, I think investment houses as a whole are looking at responsible and sustainable investing as the norm now, not as a siloed offering, because you can't really talk about delivering sustainable returns without talking about sustainable business practices. But I think it's one of the biggest shifts that we've seen, and one of the most valuable, that individuals are taking over control of their savings, particularly their pensions, for the first time. People are expressing their values through their investments and their choices on where their money's invested or where their money's not invested. And that's really, really given people agency, and it's hugely empowering. And I won't touch on the next question to Dasha, but especially for areas, underrepresented groups of society who haven't been typically enfranchised, you've got big organisations and institutions who are reacting to consumers and using their aggregate power to demand better behaviours and outcomes. And I think this is only a good thing. So whether it's not a case of ethical investing or wanting to see more sustainable business practices, it's really good to see our underlying clients vote with their feet, vote with their capital, and we as institutions who look after our clients, it's our fiduciary responsibility to make sure that their voice is heard.
Yes, and just to come on to the question about whether the industry is male dominated, yes, there's definitely, we've seen the husband taking over the household finances, but there is a definite shift. I can't emphasize enough how much I've seen women taking control of the finances, sometimes for the whole household or just for themselves, and that has been just fantastic to see. In terms of whether that has been led because there's more women in the financial industry and hence women feel like they can be more engaged and they feel a bit more at ease meeting a female financial advisor, or whether it works the other way around, that the companies are seeing more women taking control of their finances and hence they're thinking, oh, we need more female financial professionals. I don't know, I'm sure both things are driving it. I would say that at Killick, we don't see enough female applications we do have a training scheme for investment managers. They're usually for people who have had 1 or 2 years in the industry. It doesn't have to be specific to investments. It could be just in marketing or an adjacent field. So I would say there is definitely a need for female advisors, and I find that women are much more inclined to meet with me than my male colleagues. So we are really, if you're, I suppose, a woman in finance, you really have got a pool of people who have never really been engaged before that you can talk to and help. So there's been a definite shift, and I'm really happy that things like this are encouraging it.
Yes, indeed. So I hope that for everyone listening, my only advice is just apply. Even if you don't think you've got a chance, you've definitely got a chance. Yes, you're good enough. And we've all doubted ourselves at different points, but the industry is really female friendly. Like, please get involved, learn more about it. I'm sure you can contact any of us on LinkedIn, look on the game pages, look at the resources. And I think you can hear everyone here is pretty passionate about what they do, and you can have babies and come back into the industry, and there's a lot of headway being made on that front. So at a few seconds to go, I'll just say that thank you everyone very much for attending, and good luck, and thank you very much to all my fellow panelists, and I will let Becky close the session.